Welcome back to the State of the Union conference. We carry on. This is day 2 in our afternoon sessions. If you've been following us for these 2 days, you see that we have plenty of sessions today as well. We discussed public health, we discussed climate, trade, multilateralism, and economy. And we are now moving to focus a little bit more on the global digital economy. For this next session, there will be a conversation. Please welcome on stage Alexander Stubb.
Thank you very much, Sasha, and good afternoon to all of you in Europe, and good morning to Bengt Holmström in Boston, the United States of America. It's a great honor and privilege for me to introduce Bengt to all of you, and sort of a twofold honor, I would say. The first one is that Bengt is a dear friend of mine and actually a neighbor over in Finland, but he lives now in Boston, Massachusetts. And the second one is that Bengt is obviously, as you will know, has an economics prize, Nobel Prize in economics. He has been a professor at MIT and has now joined us here at the School of Transnational Governance at the European University Institute. And together, Bengt and I and students and fellows will be discussing issues linked to technology and digitalization. Good morning, Bengt. How is Boston doing?
Good morning, Alex, and thanks for inviting me. Boston is looking wonderful, but not as wonderful as Florence.
It was lovely to bike up here to the hills of Fiesole. Let's get straight into it, Bengt. I know that you've been doing a lot of work in trying to look at these sort of 3 blocks, China, the United States and Europe. And I guess my first question to you is very direct. I mean, a lot of people talk about Europe falling behind China and the US in all things tech. So could you please, as an economist, give us the facts? I mean, what is this all about? Do we suck here in Europe?
I think it is fair to say that Europe is being squeezed by United States and China and is behind. And some of the facts that are indicative of that I have listed for myself here. If you look at the largest tech companies, say 7, 8 largest, then US has 5 of them and China has 2 of them, and Europe has none. And actually it's fairly far back. If you look at the biggest companies in general, by market cap again in 2020, in the top 10, 8 US, 2 China, and now European companies. And maybe the most striking to me, at least, I knew this from before, but the thing I realized as I was preparing for this was that I saw that if you look at the top 100 startups in the world by market cap again, there is 51 US companies, not surprising, 22 Chinese companies, and European Union has 2. And the one is Estonian, the other one is in Sweden. So there's nothing in Central Europe. UK has 9, but UK is, as we know, no longer in the EU. So UK is actually more dynamic than the European Union in this respect.
Well, what do you have a feeling? Because I mean, you were in the board of Nokia, actually in the heyday of Nokia. So you saw the sort of rise of telecommunications in Finland and in Europe, and at the time we had Ericsson as well, and tech was the big thing, Nokia and Ericsson, market cap, brand, and the rest of it. I mean, and at the time we thought, okay, Europe is going to go way beyond the US when people were still using, call-in machines and the rest of it. I mean, are we in Europe sort of fighting an old war? Are we trying to catch up in a world which doesn't exist anymore? Is everything sort of lost, or what would you focus on?
Well, I think Europe has some headwinds. It's not a single country, so to speak. There's a lot of conflicts within Europe. It's a very loose arrangement. You know it better than me, all the problems we have had. So on the political side, I think the current initiative, pandemic initiative, that's a step forward, even though it means a lot of more debt. I think that's one big thing. The other big thing is that Europe has been, for some reason, very much focused on privacy, hasn't done as much as it should do on innovation. I think it dates back to, or goes back to university systems being very different, say, from the United States and even UK. And so the whole innovation landscape was resting with some of the big companies, but Nokia is not itself anymore. So these are some of the issues. It may be just the spirit somehow. I think Europe is in one respect, resting on old laurels, although it's a kind of a moral gatekeeper for the world. Not that its own history is that great if one goes far back, but it somehow feels that it is a kind of rule setter, and so it has focused a lot also on how to regulate privacy, how to regulate companies, and so on, with fairly few cards in the game itself. So it's kind of odd. I don't think the US and China will care too much unless they find these rules very attractive.
Yeah, I mean, one of the interesting things is, of course, this is becoming a little bit Finnish, but Anu Bradford wrote a wonderful book called The Brussels Effect, and she talks a lot about the European Union as a regulatory superpower. You can look at, say, China and the US as tech superpowers, or the US as a military superpower, or China as a regional power. But if Europe is something, it's a regulatory superpower. And the basic argument of hers was that when Europe regulates, the rest of the world follows. But if I may make a presumption, then your argument would probably be that don't expect the US and China to follow blindly European regulation, for instance, on privacy, because privacy is viewed so differently in China, the US, and Europe. What are your thoughts on that? I know you've talked about it a lot.
I certainly don't think China is going to look to Europe as a rule maker and a lawmaker for their initiatives. Obviously, they have to recognize that they have, if they want to be part of the world economy, they have to follow certain rules. But as you can see, they have been very relaxed about it, if one is to put it that way. US is on an entirely different legal system, as is United Kingdom, now that it's free again, common. So that approach is very different. So for instance, US tends to regulate ex post more than its ex ante. So European regulation style seems to be, just judging from the GDPR and from the just very recent proposals for digital market act, and that they try to sort of regulate ex ante, meaning that they regulate the behavior itself. And whereas US has rules about that, but they tend to go after them ex post and hold them accountable. So I think that the European regulation is just too stringent right now, given that this is only the beginning of a very big move. I think this digitalization. So yeah, those would be my concerns.
Yeah, no, I think you're right. So I guess, we could, to a certain extent, summarize and say that China will do probably what it wants. The United States has a slightly more lenient and probably flexible model when it comes to a regulatory framework. And then Europe is very much focused on the sort of aftermath of the regulation. And of course, here the interesting thing is that, as you mentioned, on the market cap of the tech giants, we see most of them in the US and in China, but you see the European Union, especially European competition policy, or for our American friends, antitrust, quite aggressively in many ways attacking some of the tech giants in the US, starting obviously in the olden days from Microsoft. We don't even remember that now. Then moving to Apple, to Google, about market dominance and these kinds of things. And I guess the big question here is, are these companies going to fall in line, or is this going to cause some kind of disruption? But Bengt, my sort of, you're known for basically looking at, the line or the crossroads between the public and the private sector. In many ways, you're one of the few that kind of understands both, if you know what I mean. I mean, you understand the private sector and its dynamics, but at the same time, you give a lot of space to the public sector and understand its logic as well. So with this in the background, what do you think are the sort of new drivers of wealth? I mean, what's going to create wealth? What's the new sort of gold and what's the new oil, if you will, globally from where you're sitting at the moment?
Well, it's very clear that, I mean, digital is the game, but within digital, it's clear that 5 years or so, largely, I would say, driven by China, but also US, data has become enormously valuable. And that's not recognized in the US right now as much as it's in China. So you see the Ant Financial, or nowadays Ant Group and Tencent and so on, creating these platforms, and the platforms and built on top of the payment system, and China had China was in an advantage because they had they start with greenfield stuff because they had nothing, and so they leapfrogged from cash to mobile pay in a very short period of time. And the mobile pay has exploded in China, and the US is, I mean, still struggling with mobile pay. And we have a lot of different systems. We have credit cards, we have PayPals, we have Visas, we have all sorts of an enormous number of startups like Stripe, which is one of the second most valuable startup right now. So the whole consolidation game is heating up here in the US. I think in this respect, I think Europe may be a little further ahead even than US. And so because they have set their standards, the PSD, the 2 is a good beginning, I think, but it's far from complete, but it is a beginning. And it regulates, payment system. PS stands for payment system. So it's a effort to standardize payment system, to give your information and allow your data to be used by other service providers and so on. The problem in some ways with that, we talk about, it's a good thing to say something about that, is that the general idea, so to speak, in Europe is somehow the individual is to decide these things, or enterprises should decide these things. They have the ownership of data. And that is a very questionable starting point, because data has an enormous social value. And it has the special feature of data is that it can be used by a million without taking away anything for anybody else. So the idea that individuals could decide, so to speak, the fate of this enormous network of systems. There's also network externalities, meaning there's, the system gets more valuable exponentially as the numbers grow. Giving sort of the ownership to individuals makes it very slow, the development, and it's, in my view, it is just wrong-headed, to put it bluntly. That is, if you look at what firms do, firms basically try to internalize externalities, as this is a little bit jargon from economics, but it means that they try to get people to cooperate, and they try to utilize common values. But if you give everybody an individual freedom to decide, then that's just not happen. The sort of common good is not going to happen. And so the natural drivers are some companies, in this case, the platforms. Platforms are a new form, basically, of companies. And they are perfectly suited, so to speak, for the digital era. That's why they have grown so fast. That's why they are top of the list, I think out of the 10 biggest companies, 7 are platform companies today, because they scale so well. And there are a lot of good things. I mean, in this regulation in Europe, it doesn't seem like they even recognize how much value there is in data. That's good value. I would separate the social media. I'm much more worried about social media and its sort of nefarious effects compared to commercial enterprises. And they are regulating everything with one, everything goes under the same regulation. But social media is a very serious issue, as we have seen in the politics of US. I mean, that scares me. The idea that commercial problems could occur, you know, and use data in a way and so on, I think is much smaller. And I would start by separating those two.
I think that's a really interesting view, and one that we don't hear very often here in the old world in Europe. And let me sort of park China on the side for a second and sort of, you know, reflect a little bit about what you just said, especially from a European perspective. I think to all of our European friends, we have to understand that the basic hypothesis here is that Europe should be the one that, you know, is about community, it's about social sharing, and in many ways, if I may simplify a little bit, Europe is rather social democratic, right? But at the center of that is the juxtaposition that the United States, which is supposed to be the country where the individual is in the center, is actually not the case when it comes to sharing data. Whereas Europe has become very sort of individualistic in its thinking. And here, Bengt, we had a really interesting conversation with Professor Carissa Wallis from Oxford. She wrote a book called Privacy is Power, and we had a session with her and with our students here, and her take, it's a wonderful book, it's really interesting. It probably draws a different conclusion from the analysis that you just gave. I mean, her thesis would be that we need to protect our privacy, or at least we need to understand that the big tech companies are mining our data, and if nothing else, we should at least be paid for it. But how would you deal? I mean, what's the sort of balance between the privacy and the community and the use of data, especially if data becomes one of the most valuable commodities that we have as individuals? So what's your solution to all of this?
Let me first comment on your statement about, it is to me almost shocking when you look at the virus situation, that we can't get a recommendation, we barely get a recommendation about masks. I mean, the individual is in charge. When you and I were young, we were vaccinated, there were no questions asked. We had to do, I mean, how is it possible that the social, like you say, social democratic Nordic countries are completely individualistic on an issue where there are absolutely enormous externalities and effects? Why would the individuals have the right, such a strong right? It's very hard to understand. It wasn't that way before, and I think it somehow is some kind of legacy, perhaps from the Second World War or whatnot. But that is, I leave it at that just to think about. So it's as if Europe wouldn't be thinking about community in this sense at all. Maybe I'm exaggerating, but when you said about Carissa, I don't share her view that the individual, I said it earlier, but I repeat it, you know, that the individual shouldn't necessarily own the data. You know, there are many reasons to say that, because there are some big community benefits coming from the fact that you know, some data is used, say health data, genetic data, other things. You know, the arguments can certainly be made that the genetic data should be used for the benefit of the whole country, or maybe even for the whole world. That's the view that that Icelanders have taken, and others. So you know, there seems to be this almost really extreme view that doesn't really gel with the history of Europe. So I don't share a view that. Let me say one more thing. The consumer, the game in platforms meaning, you know, like Amazon or something. The view, or actually better examples are the Chinese platforms like that, and Tencent's platforms. You pay basically by letting them use your data. That's the exchange. You don't pay anything else. You get a lot of things for free. The only thing you allow them to use is their data. Google is another example, of course. Yeah, Google is free. We all benefit from Google, but we are paying with the data which they then use to harvest, you know, big money from advertisement and such. So it's not that we are getting nothing for our data, you know, and so the idea that we should somehow own it and be allowed to collect money from it we are collecting money effectively.
Yeah. I think the argument that the counter argument that, let me try to play Carissa here. The counter argument that Carissa would probably say is that, listen, that's okay, we understand that, but what happens is when you share that data and someone is mining that data, there's a certain pattern that forms through the algorithms about your online behavior. And when that pattern forms, a system starts to feed you information. And that information, say in the form of commercials or advertisements, then in many ways reduces your autonomy to take autonomous decisions. But this is the sort of counter. But let me push it one more step. I mean, okay, so we are in a situation where data can be owned by basically three entities, right? The state or the public sector, the private sector or a tech company, and then the individual. How do we find a balance between these three? Because of course there are some really intimate issues linked to data that you don't really want to share with anyone, but you kind of do it automatically. So where do we find a balance between this giant tech company, the state, and me in sharing my, say, health data through my Suunto watch? I don't know.
I don't think these have been resolved. These are good issues to discuss. I don't have answers about them. I just saying that going automatically for ownership by individuals, I don't think is the right way to think about it. Because there's a lot of community value in the data, and so that's the first point I would make. And the state, there are data in Finland and so I'm sure in Europe as well. There's a lot of data that the state owns, so to speak, or at least has control over. So they have massive databases, that they are sharing with the public, but sometimes they don't share everything with the public and so on. So it isn't that they have control of a lot. So the question is more, what should the companies be allowed to do? And here anonymity comes into the play. The Chinese don't use the data. I mean, we hear a lot about the state, using the data for monitoring people and so on. I don't want to get a stand on that, but I am fairly convinced that's a greatly exaggerated view because it's very costly to monitor people. If you specific people, easy. Or relatively easy. And the monitoring, by the way, happens also in let's not fool each other. It happens in the EU, it happens in the United States. So we just don't know about it. So I would not worry that much about that in the case of the Chinese, but they use the data, in my view, in the most effective way, even compared to the United States.
It's an I mean, I look at, okay, I'm a political scientist, so I immediately go back into a separation of power. I look at, how can minorities be protected from the state, etc. So I go back to a worldview, that could have been, driven out by, I don't know, Machiavelli or Hobbes or Locke, and the way in which we should protect and not protect in different types of situations. I think this whole debate about data is, bringing it to the next level, and I think it's going to be one of the most interesting governance issues that we deal with. And here is where we really come to the three different blocks, China, the US and Europe, and how we end up deciding on how to manage or govern the data. And I know that our first question in a few minutes is going to come from one of our Chinese students, but on the sort of Chinese case here, obviously, you could say that the sort of drive for artificial intelligence began when DeepMind beat the champion in the game Go, and then there was a decision by the Chinese state to pour in a lot of money into artificial intelligence. You obviously had, Alibaba, you had WeChat, the rest. I mean, the whole system was in many ways there. But then, I guess from a European perspective, looking at again from a privacy side, now you have these apps in China which basically, reveal everything about who you are and what you do, and then you can end up in a system of social ranking. So, if you don't eat the right way, if you don't exercise, if you don't move the right way, there are implications for your insurance premiums, for your loans, etc. How far do you think we should push that, or where's the limit there?
I think those are, issues. Those are serious issues. I don't want to put, push away this as if everything is fine. And I don't have an answer for you where you draw the line. But I was stunned when I was in China. I've been a fair number of times in China and saw the young people sharing their credit score, for instance. They had it all on the phone, and it showed the credit scores on the phone. One reason they were perhaps not so worried about it, because one of the determinants of those credit scores, which, as you say, depend on a lot of inputs, is that if you don't, for instance, trade on the Alibaba platform, your credit score will be low. So they had sort of, men in particular had an excuse, their wives or their girlfriends or whatever, were more active on the platforms, therefore they had a higher credit score. So they are kind of reasons why. But they were not shy about showing them. There were like 20 people around the table, everybody pulled out their phone and showed what their credit score was. That said, I think there are certainly indications that there's social grouping and so on, that if your credit score or some other scores are low, you are not let in. But this is human. This has always been human behavior.
Yeah.
You may be able to go in wherever you want. It's just that, what used to be just a village, now the world is the village. So everybody, there's sort of, in that sense, perhaps not places to hide anymore. But there's a natural tendency of humans to stereotype. And what these algorithms do is essentially stereotype into thousands of boxes. So Alex Stubb sits there in some box, and together with people like you, and therefore you will get a loan, or you will get the ticket, or you will. But of course, American Express does the same. You get things that other people don't get, and so on and so forth. But they do it in a sort of, you may say, extreme way. There's something very positive about the stereotyping that's going on in China also. That is, there's negatives, but there are positives. And the positives are that it doesn't matter what your color of skin is. It doesn't matter whether you are handicapped. It doesn't matter. Of course, the algorithm would know that you are very quickly would know that you are female or male, or, from your behavior. But on the whole, for instance, on the credits, and they have statistics on it, women actually, they has enhanced the women's opportunity to get, and of course it has massively become inclusive with respect to people who have been totally underserved in China. So, part of the Chinese enormous sort of revolution in terms of reduced poverty. I mean, China has almost no poverty anymore. Comes from the ability to actually extend credit and extend bank accounts and through mobile pay and go it into the western part of China that was basically underserved or unserved, one can say. So the reason I have been in China actually has everything to do with this design, my belief that somehow or another this will actually solve in a big way the poverty problem. And it has opportunities in Africa, has opportunities, say, much better than what Mohammed Yunus, I'm not criticizing him, but that's a slow, non-scalable process. What's so remarkable is digital scales to millions, to hundreds of millions of people. And at basically, I would say zero marginal cost, but very, very low marginal cost. So we should look at we should regulate, yes, but we should also keep a keen eye on the opportunities.
I think it's a lovely and really refreshing view, Bengt, that you're bringing here to the European debate. And I'd love to poke you a little bit more in Europe. But as you know, the key of what we do at the European University Institute, and of course the School of Transnational Governance, is to teach and to focus and to interact with students. So I'd like to bring our first student onto the stage, and I think that there's a very good, an extremely good bridge and as we get the microphone coming here, because we ended our conversation on China. And one of our 5 students from China, Weiming, is here with us today. And Weiming, the floor is all yours. And you can even demask yourself. Don't worry about it.
Thank you, Alex. And hi. So borrowing the concept of supply and demand, I noticed that when we talked about putting the right money into what we classify as right projects, it is more likely to discuss the issue from the supply side. So rather, I questioning this from the demand side. It is because I noticed that based on some surveys, I found that a great amount of small and medium-sized enterprises in China in 2018 clearly stated that they don't need external finance and they don't need money. And even during the pandemic, they said they don't need external finance and there was only a small increase. So I would like to ask, do they really don't lack money? And how, if so, to what extent will this do harm to the economy? And further, how we should rethink the role of banks and other financial institutions?
Well, there were sort of several aspects to your question, so or your comment. Thanks for that, Weiming. Let me just say it's such a pleasure to be speaking to the young generation, and I really am grateful for the opportunity here. You are right that one of the fundamental problems of society is matching, as I put it, ideas with money. There's a lot of frictions going on because of information problems. How do you solve that? That's what we are partly talking about here. Platforms will bring their new methods for instance, in extending credit. So one of the things that you asked, how is banking changing? One of the ways they are changing in the heels of especially the Chinese models is that the information becomes a substitute for collateral. A cheap substitute, I should emphasize. Collateral is the traditional way of getting money. You have some house and you can invest in that. You can invest in things, you can get loans from banks as a function of having that house. So you can borrow. But in China, they don't have credit cards that many for individuals. So instead they have mobile credit. And that credit is based on these credit scores that make no reference typically on any assets that you own or something like that. So it's a revolutionary way of thinking, and that's why I said that it may get into the poor people. It will help to solve the poor people's problem. Has done it already, and so. I'm picking on the last part of your question. I don't know why these SMEs don't. I don't know why they don't want. I think they like money, but I don't. They apparently have enough. Maybe they are actually, have received credit from Ant Financial, and that's not counted in the scores that you have seen. But there's a lot of credit that Ant Financial and also Tencent and other companies are extending to especially small and medium-sized enterprises. That's one of the really big winners in this whole game in China.
Thank you so much.
Thanks a lot, Weiming, and thanks, Bengt, for the answer. And I think this is a really sort of good reminder to all of our European friends and American friends, the pace at which China is going at the moment. And I have many friends living in China, both European, American, and Chinese, and the stories that they tell, they're mind-boggling. I sometimes feel that we're moving on a sort of black and white screen very slowly, when China is moving at a pace and efficiency that we just haven't seen for generations. But next, we have one of the powerhouses of Europe coming in. So one of our German students, Melina, who is going to pose the next question to Bengt. Welcome, Melina.
And thank you for the opportunity to direct this question directly to you, Mr. Holmström. My question concerns the data privacy laws, such as GDPR, and the linkage, the overlap between them and the technological innovation. To what extent has the EU's position in the race towards a digital economy been hindered by their strong data privacy regulations? Thank you.
Well, I touched on that already, so I can't say how much, but I definitely am concerned that it will slow up, not help, but possibly hinder Europe in terms of catching up with the United States and China. So I would look for much more varied and tailor-made regulation, as I said, and also have it differently designed, either through audits or let me repeat something. If we think about how society protects us against sort of faulty products or scam products or something, it isn't that or car quality or so. It's not free for all that the consumer decides whether you don't want to buy the car because it is sort of has problems, or it sort of puts the burden on you to look into the problems of a car. It's society that sets regulations or standards of cars and then also audits the cars in various ways. And so I think this notion that the consumers are yes, we should be able to choose which car we want to do, but it's a great waste of resources to have individuals sort of involved in evaluating how reliable these different kind of companies are, or somehow press buttons. And I mean, let me say the GDPR, as far as I can tell, is almost dysfunctional for a private person. If you try to find out all the things and then decide whether you should let them use your data or not, nobody in their sort of good senses would be doing that. It should be society, that the state, that goes after that. So I think if you move it to that level, then that would also free up resources and speed up. But yes, currently it is a big it has the potential at least to become a big friction. So your concerns are well founded.
In many ways, I could ask Melina a question. I mean, do you, Melina, ever, when you see the GDPR, all the cookies fully accepted, do you ever go behind it and look at it? Are you concerned about it as a youngster, if you will?
From a German perspective, I can say that I always go to the different ones and then don't accept the ones that I don't have to accept.
Yeah. She's a professional. I think, Bengt, the problem here is that these youngsters know what they're doing when they're online. You and I are just clueless. This is clearly what's going on. But okay, then we thank the. Go ahead, Bengt. Yeah.
But, no, I said just maybe. I think you are right that we are clueless. That I am right, certainly.
There you go. Thanks a lot, Melina. Next, we're going to have a question coming from Zach. And Zach is a great student of ours and has, how would I say, a moderately interesting background, being a Syrian refugee moving to Germany and now being here with us. So Zach, floor is all yours.
Kiitos, Alex, and thank you, Bengt, for having the time to talk to us. Good morning and greetings to Massachusetts. First, I want to catch up on one of the points that you've been discussing with Alex, and it's about data and privacy and power. I think that we live in a time where data is power and privacy is our new currency. Recently, Apple's software update has done way more in the field of data protection than years and years of government efforts trying to regulate the online advertisement market. And as Melina was saying, it's since the GDPR, since we had something this big, because now our software updates asks us for consent to be tracked. On a different topic, Facebook's standoff with Australia has shown that governments cannot unilaterally regulate these global entities. So in both these examples, I want to ask you a question. As a new prof at the SDG, which platforms do you think are appropriate for national states to actually regulate these global entities? And is it time for us as citizens to stop wasting our time lobbying governments and start going and lobbying Facebook and Apple instead?
Well, thank you, Zakaria. I would, again, there are several pieces to your question, so let me pick the one. the first thing to notice in reference to Apple is that I'm not sure. It's a great publicity stunt from them. It's a brilliant move, but I think actually it's an anti-competitive move. I mean, you can see how Facebook reacted. You can see how Google is not reacting that much. But the thing is, they have so much data. So regulations for big companies is good. That's what people. That's one of the lessons economists have learned over time. The more you regulate, the more concentrated the market becomes. The more the big companies love it, because the fixed cost to enter the market really goes up, and you have to have scale in order to be able to pay for it. So I think that Apple is doing this, at least partly, basically to say, look, we have a lot of data. We don't need those other sources of data. And they are perfectly happy to see them shut down small, have this option to shut down sort of smaller players in there. Actually, the evidence is very strong that people converge on bigger companies, the more you sort of have the opportunity to shut down. Not sure that they do it, by the way, as much as you think. There's also data suggesting young people click just automatically, like the old folks. Okay, so that's I would say that that's something to watch out, actually, for regulators. Is Apple doing it for the reason you think they are doing it, or are they doing it? Will it actually have as a consequence that there's harder to enter, there's less innovation, and so forth? Because these are gigantic companies by now, and that starts to be a somewhat of an issue. You had an other question that I thought was, or other aspect. Yes, one of the things about young people, should you sort of put pressure on Apple or Facebook or whatever? It's happening already. You saw the Cambridge Analytica, caused a scandal for Facebook. They lost billions in terms of market cap because of that. So companies are very sensitive to what people think. And again, Apple is partly doing that move to, curry favor, sort of, to look good in the eye of the consumers and the young people and so on, and catering the concerns. So yes, I think on all accounts, if you talk climate change, you talk anything, young people are the drive. They are the ones that put pressure on the companies. Just think of Greta or something like that. So this is what you should be looking for.
It was Bengt.
Thank you.
Thanks. And actually, Bengt's mother tongue is Swedish, so tack would work as well.
Duck Bengt.
So this does remind me of a story. I did have dinner with one of the founders of one of the 7 companies that you have mentioned today. The person will go unnamed, but I asked him or her about the GDPR. And Bengt, you know what his answer was? He said, of course we love it. We can kill off a lot of competition with it. So, yes. Point well taken from what you just said, linked to the question on Apple. And by the way, the company that I was dealing with was not Apple. Next, we have Hieu from Vietnam. The floor is all yours.
Thank you, Alex. Thank you, Professor Holmström. It was an interesting conversation. Now, I know we have been talking about big techs like all the time. There have been numerous ideas, both positive one and negative one. But regardless of those, we cannot deny that they have great capacity to produce future technology as well as predict the trend of the global digital economy. However, as you have pointed out through all over the section, we cannot find any tech giants in Europe, which has been limiting the role of Europe from the supply side, but rather the consumption and regulation side. So my question, just very simple. Now, during this pandemic thing, which has given a great opportunity for tech firms to rise up, is it the time for Europe to have its very own tech giants?
It certainly is the time for Europe to get going and utilize the pandemic. Is an opportunity. And let me explain a little more what I think is the key. What should Europe, in the first instance, so to speak, do to catch up? I think they have to start working from the universities, from innovation. They really had to focus on innovation. And the culture of innovation is not the same here in Europe as it is, say, in the US or China. And I think it has to do partly with how the universities are organized. In that sense, I don't think it's an accident that UK has a lot of startups, compared to Europe. But Europe is starting to change. So the language differences are less. Everybody speaks English, and so on. So there are opportunities, but I would very much focus on educating students from the beginning, or bringing the students in from the beginning into the startup mentality. Entrepreneur. We are becoming all and more entrepreneurial, or rather, we have to become more entrepreneurial. The big companies, sort of the hierarchy of big companies, not really in the future. So that's what we do at MIT, where I am working. And when you look at it, the startup scene at MIT is almost entirely driven by students. And the students are the ones that are actually, it's the students that make the startups. I think 90% is the figure right now. It's alumni. It's not, what you might think, the professors and the labs. Professors are just here. They are not really big on commercializing. And so commercializing can be also taught, but you can't teach people to become inventive necessarily, but you can teach people to how to commercialize. And that's also an aspect that the MIT is funding. And we are very much let me add one more thing, which is that we are not trying to, we are not helping these students in order to take some slices of their startups. MIT is completely dedicated just for the success of the students, because we think that will, if they succeed, eventually they will give us some money. But we are not going to try to harvest, the money. And I see some of those signs in Europe. This is a good idea to be the startup business, because then we can get some money into the universities. I would really urge not to think in that direction, but really entrepreneurship into the universities, and with the help of firms. And Finland, by the way, has done extremely well in this area in the last 10 years, Well, that also entirely driven by students.
Thanks, Bengt, for your answer, and thank you very much, Hieu, for your question as well. And of course, in Finland, we have this wonderful startup event called Slush, which takes place November, December. And may I add that, Bengt, we're really happy to have you here at the School of Transnational Governance in Florence, because of course we see ourselves very much as a startup. So you'll see a whole bunch of young and dynamic students. You won't see young and dynamic professors, but you'll see young and dynamic students. We have a last question coming from a young and dynamic fellow, Linda from Latvia, and we have a couple of minutes left of our time.
Thank you for having me. It's a real pleasure to join. I have a quick question about the recent statement from the British, German, and Australian authorities, who announced, taking a united stance, that the pandemic won't be a good enough excuse for new merger deals. And as we've discussed over this last hour, we have had a problem with digital monopolies, destroying competition, distorting the market. So the question is, once we start building back better after the pandemic, what are the opportunities for improving the market structures? Do we need better merger controls? Or is the hard truth actually that it's just a little bit too little too late to effectively address the monopolies that we already have? Thank you.
Well, I don't think it's too late. It's true that Europe is behind, but it's not too late to catch up. It is. I think it has to. I would not go the regulatory route as you were suggesting. I don't believe that trying to sort of bring down these giants somehow from Europe is going to work, and nor is it going to help Europe. As I said, I'm sort of repeating some of what I said to you is that we have to start building from the small up, and we have to. I think this regulatory effort, for instance, if we talk about the very recent proposals for digital market act, they actually catch only the biggest US companies, basically. There are maybe 2 companies in Europe that are going to be affected. The rest, because it's a size-dependent thing. And this whole idea that it's a size-dependent thing, I think is a little bit questionable. As I said, I would go for more what they are doing, what is the data used for. That should be leading the way, who we should regulate. But it looks to me, or it could look to an economic eye, as this is a big move to basically shut out, the big companies, or at least put sticks in their wheels with respect to Europe, coming to Europe. And so it's like a protective move, and protections have never worked historically, really. So I think Europe should be more relaxed about this, and they should just let these big companies be here and fight them, learning from them and fighting them through, as I said, I think from the University of, they are innovators and disruptors. In this regard, by the way, China is doing better than the United States, because they have the whole ecosystems are competing against each other. So China is a much more competitive place than US with respect to. US has developed, kind of natural monopolies, they might say. Facebook is a social media, Google is a search king, and Apple is the, king in, well, whatever. Amazon is the king in retail and so on. So that's not the structure. The industry structure is very different in China, and so maybe the Europe could start to build in that direction. But it's going to take time. But it is an attitude issue and an educational issue in the first place, and going into it. Let me give me one other warning that I think troubles me, is that politicians like to have some statement like, we are investing 4%, or we have put $1 billion into startups, or whatever. They like to have some financial figures to throw around and sort of boost them. Innovation is not about going with money first. Ideas have to attract money. Good ideas don't go to money. So putting a pile of money there and letting people, hoping that the bright minds will come there, bright minds don't move. And if you look at actually all the most valuable companies in the FANGs, for instance, not one of them ever courted investors. Steve Jobs never spoke to an investor. Google in various statements said, we are not interested in investors. If you don't like us, go and invest somewhere else. I mean, it's remarkable, the ones who have been the most anti-money oriented in that sense have actually become the most valuable companies. It's just underlines the fact that ideas are big.
Thank you so much, Paldies.
Thank you, Linda, and thank you, Bengt. Our time is up. I think it's been a wonderful 50 minutes together, talking about the digital aspects of the global economy. And interestingly enough, Weiming's question was about why don't Chinese SMEs want money? And we just ended it by saying that, well, Apple and a few of the others didn't want it either at the time. Bengt, I think this was a great session. Really appreciate you joining us, and we're really looking forward to seeing you here in Florence sometime in the fall. In the meanwhile, have a good springtime in Boston, Massachusetts, and vi ses snart.
Yes. Thanks, Alex, very much. I'm looking forward to coming to Florence. Can't wait.